Welcome to the Capital Spreads weekly look ahead. Today is Tuesday the 29th of January 2012. We have got a very busy week this week from an earnings perspective and an economic data perspective. The market has commenced in the fashion that it has been going for so far this year. January has proved to be very strong, and in fact, if we continue in this fashion, we could record the third best January for the FTSE ever. So we are definitely in what one would classify as an uptrend, and any sell-off really seems to be quite short-lived. So the FTSE at the moment is at 6,300, the Dow at 13,870, Euro-dollar at 134.25, cable, which has had quite a big sell-off. Sterling really has suffered since last week's poor GDP numbers. Cable's at 157.15, gold at 1660, and Brent at 113.00. Yesterday, really, we saw some pretty mixed data from the US. We saw some good durable goods data and then some poor housing data. So quite a mixed session. It did lead to a positive open for the European indices today, so they remain relatively well supported, if not perhaps a little bit overbought on some of the technical analysis measures. So clients still remain very much short of those indices, in particular the FTSE. Today we saw again a little bit of mixed data from Europe. We saw some better than expected consumer confidence from Germany, things just recovering a little bit there. In France, not so good, or at least came in within expectations. Of course, France going through some austerity measures, increased taxes there, which hasn't done much to boost consumer confidence. And then we get the consumer confidence from the US later this afternoon, which of course will be closely watched because we're expecting a bit of a bounce in confidence, and that is following the dip that we saw as we were going towards fiscal cliff. Of course, fiscal cliff has been averted, so should be a bounce in confidence for the US. Tomorrow, more confidence data. We get some from the European Union. We also get UK mortgage approvals. We also get the monthly private payroll data, the ADP figure from the US, and that's expected to come in around 165,000. We also get the first reading of Q4 GDP for the US. Now that's expected to come in at 1.1%. Quite a few people expecting maybe it might be softer than that. We also get the FOMC rate decision as well. Then Thursday we get UK consumer confidence. That's expected to remain around the levels that we've seen, minus 29. And then in Europe we get from Germany unemployment data and inflation data. In the US we get income and personal spending numbers, as well as the Chicago PMI. And then on Friday, the highlight really, of course, will be the non-farm payrolls, expected to come in at 160,000. But before then, we get some manufacturing PMIs from the UK and the European Union, as well as European Union unemployment data. Then, as mentioned, the non-farm payrolls from the US, and in the afternoon we get Michigan confidence and manufacturing data from the US as well. So a huge amount of economic data to consume this week. Can the equity rally continue into the end of the month, and will it go forward from there? We'll yet to see. As mentioned, clients still very much short the FTSE, expecting a pullback. But if there wasn't enough economic data to get our teeth into, there is of course a continuation of the US corporate earnings season, and this week there are lots of S&P 500 companies reporting. So very, very busy week, and equity markets still remaining well supported. That's it. As ever, do give us feedback, media@capitalspreads.com.